Good afternoon, everybody. In this episode of How to Trade, we're going to be discussing auction failures, or what I like to call failures to rotate. I'm going to start off with a quote from James Dalton in his book Mind Over Markets. We're going to go into some free-handed examples, and then I'm going to close the video up with some actual examples using the S&P 500 futures. So starting off with the quote from Dalton, in his book, he's discussing follow-through, and he says that failure to follow through is just as significant as successful follow through when monitoring market activity. When a market auctions above or below a known reference point, one or two scenarios will develop. New initiative activity will fuel continuation beyond the reference point, or two, the auction will fail to follow through. After an auction failure, price is often rejected in the opposite direction with speed and conviction. The magnitude of the movement depends on the significance of the tested reference point. So what he's talking about is when we're looking at a volume profile, when we are looking at the value area high, value area low, high of day, low of day, that is what he's referring to as reference points. So what he is discussing is when there is failure to follow through these levels that say value area high, value area low, that can actually give us a signal. So let's go ahead and start off with some free-handed examples. And obviously, if you guys don't understand volume profile, this video is not going to make any sense to you. So please start off by watching my volume profile series. I have a ton of videos on the channel that discuss volume profile. There is an entire playlist dedicated to volume profile. Be sure to check that out. But okay, starting off with the free-handed examples here. Let's say we have a D-shape balance here. Let's say we have a normal balanced profile and we have the value area high and the value area low. And let's say this was on an uptrending market. Okay. And then let's say the next day we continue to uptrend. So we continue to push up and we build some more value outside of that previous value zone. Then we go for a standard pullback into previous value. Okay, so let's keep an eye on the previous value area high and the previous value area low. If we can begin to rotate back into that previous value, and let's say we start that value retrace, but we do not have the conviction to complete that value retrace, this is what we would consider a failure to rotate, okay? An auction failure, as Dalton would call it. This retrace was supposed to happen once we started to develop value below that value area high. So once we had some 30-minute closes or whatever time frame you want to watch, typically I watch the 30-minute closes, but once we start to build up that value by closing some candles below that value area high, the market is telling you that it wants to rotate back to that value area low. If it fails to finish that rotation, that is a failure to rotate. That is going to give you a signal that the buy pressure is so strong that they are not allowing price to complete that rotation. If price was very bearish and there was a lot of sell pressure and there wasn't a whole lot of buy pressure, that rotation should have been fairly easy. But because they stalled that rotation, and they began to bounce the price higher, that created that auction failure. So typically, with these failures to rotate, what we look for is obviously what we just went over. We look for that failure to rotate, but following that, we want to see, are they going to repair this? Are they going to repair that failure to rotate? Are they going to retest that level and fill in whatever's left? Typically, we look for either the same day to repair that level or the following day. If it does not repair it very early on the following day, let's say we closed up here and the following day opened up and then we went for that repair. If it finished that repair, then that's good, right? The market is still bearish. They're still getting the sell pressure. They completed that value retrace. So most likely, they'll probably want to continue lower. Well, let's say they opened up and they tried to push lower, but they once again could not finish that rotation. They could not repair that failure to rotate. If it does not repair that following day, typically the continuing market structure from that point on is extremely bullish in this example, right? If we flipped this, then obviously it would be bearish. But in that example, the market structure would be bullish because they are not completing that rotation to the downside. The buyers are stalling that move and pushing it higher. Okay. Let me go ahead and delete all this and we'll go over another example really quickly. So let's start over. So let's say, what do we need to see to trade these failures to rotate? Okay. The first thing, you obviously need some value. It doesn't matter what type of day. I'm just using D-shaped days because they're the easiest to cover. It could be a P-shaped day. It could be a lowercase b. It could be a capital B, right? It doesn't matter. The D-shaped examples are just the easiest ones to cover. So using the D-shaped value, let's say once again, we're in an uptrend, start to break out. We need to develop some kind of value above that high. You don't want to see like a very quick breakout and then we don't really develop any value here and then it retraces. That's not going to give you a significant trade. We want to see strong value building outside of that previous value area. Typically that can be from the following day, the overnight session, whatever it may be. It could be even the current day, but realistically, you need significant value outside of that value area. Okay, so let's say we have that significant value above the value area of the prior day. When we go for that retest, it does not matter how low that retest gets. It just has to not complete the entire rotation. Okay, so it could bounce right after re-entering the value area high. It could bounce around the POC, right? As long as it doesn't complete the entire rotation, that is a failure to rotate. Now, one thing that it has to do is it has to bare minimum get back inside of the value area. So if this were to pull back and then bounce before breaking that value area high, that would not be a failure to rotate because the rotation never started, right? You need to start the rotation to fail the rotation. Okay. So bare minimum, you have to break inside of that value area and then bounce. Doesn't matter how deep it gets, it just cannot finish the entire rotation. Following that, the market structure is very bullish in this example. In another example, if this were value above us, and then we generated a lot of value below that value area, and we went up to retest it, but once again, we just barely broke, and then we left open a portion of value that we did not finish rotating. In this scenario, that would be bearish. Okay. You have to think about when you start that rotation, what does the market want to accomplish? It wants to accomplish the entire rotation because it's signaling that because you are getting value back inside of the old value after we have already left that value zone. Okay. So they are signaling that they would like to finish that rotation, but something is stalling that and causing the market structure to shift. Okay. All right. I don't want to kill you with all these free-handed examples. So let's go into some live examples with ES. So funny enough, I'm making this video on Saturday, and we actually had an example of this on Friday, so the prior day here. So we had a great example of this using Monday's value area. And this is a good example to show you that it doesn't have to be the following day. Okay. So we do not have to create that failure to rotate on just the following day. We just have to see value outside of that original value area. Okay, so the original value area on Monday was going from 55.02 up to 55.61. And then we generated significant value above that value area. Okay, so that's the first thing we needed. We needed that value. Second thing we needed was value outside of that value. The third thing we needed was that retrace. Okay, so here is the retrace on Friday. We can see that we began to retrace. It actually started on Thursday and then continued into Friday. So let me draw it out like this. So if I draw out the entire value area, you can see where this rotation kind of began. We started to build up significant value above that value area, so significant, in fact, that the POC was trading above that value area. And then towards the end of Thursday, we can see that we started to rotate Monday's value area. And then Friday, we tried to continue that rotation. Both of these days are showing an incomplete auction, a failure to rotate. Okay. So where is that incomplete auction? On Thursday, it would have been here. Okay. Because we're looking at the low of Thursday. You rotated this entire chunk of that value area, but we left this lower portion left unfilled. Okay. So then on Friday, we tried to repair even more of it. So it tried to repair and it left open that much of Monday's value area. So with two back-to-back days failing to complete that rotation, this is giving us that incomplete auction. And typically, these incomplete auctions like this are extremely bullish, right? Because they are showing that the market structure attempted to change. It attempted to break this uptrend and continue lower. It could not do it. It did not have the sell pressure to break that market structure. So we are shifting this short-term market structure back into being bullish. Okay, now this wasn't the greatest example of a shift because we are still seeing weakness on that Friday candle. Okay, but I'm not going to get into that on this video. But typically when you see these incomplete auctions, you would like to see the trend shifting in structure, right? Showing those higher lows, showing those higher highs, and pushing it back up. This case here, still showing lower highs, so not the greatest. But like I said, that's for another time. Okay, let's go over some other examples here. So here's another example way back on Wednesday, June 5th. Very similar market structure to the example that we just covered. So we had a very wide value area here. We started to build value above it. You can see it started to push out of that value area. This example here does not have significant value above this value area, but what it does have is very sharp rejections of those rotations. Okay, so the first attempt to rotate, you can see we started to push these highs, and then we started to rotate once we had all that price action building back inside that prior value area. This is where the incomplete auction would have began. So this was the incomplete auction on Thursday, and then they tried to repair it even further on Friday. And then this was the left open incomplete auction on Friday. So seeing these failures to rotate, this is very bullish for the market structure, for the overall trend. Okay. They attempted to break that market structure on multiple attempts. They tried to finish that rotation on multiple attempts, and they failed every single time. So for the swing traders, if they would have seen that incomplete auction there, that would have been extremely bullish. And if we zoom out, obviously, it was very bullish. Okay. Let's go over another example here. Now, sorry, I know all of these examples are bullish ones, but that's because the market is just going straight up. So it's easier to find these bullish examples. But okay, this is almost a perfect example. This is exactly how you want to see the incomplete auctions play out. So we have a pretty wide value area here, generated a lot of value, and then it attempted to break on the close, right? So you broke out a value on the close, built value outside of the prior value area, but they said, I don't know, that's not enough, right? Let's go back and retest old value. So that's what they did. They came back to retest old value. You can see here, this was the value area to begin with. It retraced down to here, leaving open this large incomplete auction. So seeing that they failed to finish that rotation, in the back of our mind, that is bullish, okay? So right away, that is bullish. But for the longer term guys, for the swing traders, they still want to be a little careful, right? Because that following day, that next day, could go for that repair. And they tried to. You can see they opened up the overnight session and they tried to go for that repair, but then they put in a higher low. So once you see that, you can basically say, okay, that incomplete auction is the bottom. That is the shift of the market structure. The buyers are not allowing it to get back into that old value. So once you see that higher low there, the swing traders really like that, and that confirms that their market structure is now extremely bullish. And this is another great example because this is one of the examples that completely shifts the entire market structure of even the higher time frame trend. So you can see the higher time frame trend was very bearish. Price was continuing lower, lower value, lower value, lower value. Then we have that incomplete auction. It tries to go back down to continue that lower value trend, and it breaks. It breaks the entire market structure, not only of the short-term trend, but of the long-term trend as well. And then if we zoom out, you can see just how bullish that incomplete auction ended up being. Okay, I believe I actually have a bearish example before we close up the video. Here we go. So here's a bearish example. So we have a very wide value area here. They don't have to be very wide, but most of the examples that we're showing, they are wider. And typically the wider value areas are harder to retrace, obviously because they are a wider price range. So typically with the incomplete auctions, they will have wider value areas. Okay, so let's take a look at this value area here and let's see how much they retraced. Okay, so that is the value area of the prior day, right? So let's say we were trading here. So we began trading and we went for that value retrace. And it was a pretty strong value retrace. They were able to push this, 60 points, 70 points. Very strong value retrace there. But they were not able to complete that value retrace. So all of that momentum was basically for nothing. They were not able to complete the entire retrace back into the POC, back into the value area high. So what that ended up looking like was this. So that is the leftover rotation. That is the incomplete auction. Okay. So same thing I said earlier. Typically, you want to wait for that next day. You want to give them one more chance to see if they want to finish that auction. And this obviously is not a great example of instant follow through. You do get follow through, but it takes quite a while. But okay, that next day, they try to go for that retrace, tops out early, puts in a very small lower high there. So still bearish, right? And then once again, tries to go for it. Fails. Still bearish. Tries to go for it. Fails. Tries to go for it. Fails again. Okay. So when you're trading this, you can obviously trade this on like a day trading aspect, taking kind of small stabs at these failures, or on a swing trading aspect where you're saying, okay, I can put my stop kind of above this level here. Or if they complete that rotation, I'm done, right? They complete the rotation, I'm going to get out of my trade. And then you just hold that bearish swing trade until that is done, right? And they were not able to do it. So obviously that bearish trade worked out pretty well. Okay, I'm going to give you one more quick hand-drawn example, and then we'll call it a video. If you guys have any questions, I know this concept is a little confusing. Just put them in the comments below. Like I said earlier, this can be on any profile shape, okay? It can be on the D shapes, which are the very standard kind of balanced profiles. It can be on the E shapes and lowercase b's as well. And I want to give you a couple examples of these on my hand-drawn examples here. So let's say price is trending higher. Or actually better yet, let's say price is trending lower. Because a P-shaped profile, as the textbook teaches it, is a shorts covering rally. It's not extremely bullish. It's when the shorts are getting weak. Okay, so around these P-shaped profiles, we really want to watch out for these incomplete auctions because that is already shifting our market structure very slightly. We were in a downtrend, and then we see a P-shaped profile bouncing off that low and building that value on that high. Okay, so we are paying close attention here to any market structure shifts. Okay, let's say we have that P-shaped form. So we build up value here. Let's say our value area high is there and value area low is there. Very standard for a P-shaped profile. Okay, let's say that the next day we begin to break and we build up some more value up here. And then we go for that incomplete auction. These are extremely bullish on a P-shaped profile because of what I just said. The P-shaped profiles are already indicating to you that the market structure would like to shift. Typically a P-shaped profile after a downtrend. Okay, same can be said for an uptrend, but that's just following the same market structure. So it's not showing that significant shift. Okay, so downtrend, P-shaped profile off of the low, then an incomplete auction. These are extremely bullish. Okay. And the same can be said for the lowercase b's. Okay. So if we have an uptrend and then we have a lowercase b, kind of showing that those bulls are weakening and they are covering their positions, they're closing their positions, whether that be for a loss if they were trapped or just taking profit, doesn't matter. Let's say the value area high is there, value area low is there. We try to continue that downtrend, but it doesn't have enough, right? It builds up value and then it bounces. Same thing here. If this shows a failure to rotate, they did not finish that value rotation there, that would be an incomplete auction, and that should be extremely bearish because it's confirming that we are going from an uptrend into a downtrend. Okay, kind of like a rollover top. This is why we like trading those rollover tops so much on our scalping as well. But all right, guys, that is it for this video. I don't want to show you too many examples. I don't want to confuse you guys. So hopefully this helped. If you guys have any questions, feel free to put them in the comments below. I will get to them as fast as I can. And I'll see you guys in the next one. Peace.